The United States had been attacked, and the president was going to do everything possible to ensure that it didn't happen again on his watch. The rhetoric was turned up full blast in the fall of 2002 as the United States came back from vacation and the midterm elections were right around the corner. One of the more candid comments about why the Bush administration had waited until September to press its case to the UN came from then White House Chief of Staff Andrew Card, who said, "From a marketing point of view, you don't introduce new products in August." First, on September 12, President Bush spoke before the UN General Assembly and called for the UN to address the grave and gathering danger of Iraq. On September 26, U.S. Secretary of Defense Donald Rumsfeld accused Iraq of harboring members of al-Qaeda and helping them acquire weapons of mass destruction (WMD). Next, on October 7 in Cincinnati, Bush gave a nationally televised address in which he argued that Iraq, on any given day, could attack the United States or its allies with WMD and could give those weapons to other terrorist groups as well. On October 10, the House of Representatives passed a resolution that declared Iraq to be immaterial and unacceptable breach of UN Security Council resolutions and provided Bush with almost unlimited authorization to use military force to deal with the threat posed by Iraq. On October 11, the Senate passed the resolution. On October 16, President Bush signed it. While this was going on, U.S. Secretary of State Colin Powell was pressing the UN Security Council on Iraq. Most of the 14 members of the council wanted UN inspectors to return to Iraq. However, it was a question of what to do to Iraq if Iraq did not comply. The key group was made up of the permanent members of the Security Council, or P5, who had veto over any resolution. The United States had the backing of Great Britain, but had to convince China, Russia, and France of the need to back up inspections with force. Powell created a diplomatic masterpiece with UN Resolution 1441 and it passed unanimously. Essentially, it stated that Iraq had to immediately and completely disarm. Iraq had to declare all of its weapons of mass modern, short-term war. 219. Destruction and account for its known chemical weapons material stockpiles or face serious consequences. To France and others on the Security Council, this meant that if Iraq didn't comply, then the United States would have to come back to the UN and get approval for force. To the United States, the resolution gave it what it wanted on Iraq meant that it wasn't necessary to go back to the group for further discussions. However, Powell did go back on February 5 to provide a PowerPoint presentation on the WMD that the United States believed Saddam Hussein was hiding. Powell had convinced Bush to draft another resolution to specifically provide the authorization of force against Iraq for noncompliance, but it never made it to the Security Council as it was clear that one of the P5 would veto it. From Powell's presentation on February 5, the debate on Iraq raged across the world. In the financial markets, we breathlessly awaited the reports and appearances of Inspector Hans Blix. France, Russia, Germany, and China all would eventually be opposed to the use of force. Demonstrations were held in Rome, London, and Berlin. Pope John Paul II sent a special envoy to President Bush to urge him not to go to war. On March 20, the invasion began despite these objections. On March 22, President Bush discussed the invasion on his radio address. Good morning. American and coalition force have begun a concerted campaign against the regime of Saddam Hussein. In this war, our coalition is broad, more than 40 countries from across the globe. Our cause is just, the security of the nations we serve and the peace of the world. And our mission is clear, to disarm Iraq of weapons of mass destruction, to end Saddam Hussein's support for terrorism, and to free the Iraqi people. Market reaction. Unlike the first Gulf War, this war didn't have a single event that triggered the world into action. This meant that the response by the markets would be more diffuse and occur over a longer period of time. There was also this feeling among traders of, been there, done that, in the attitudes or worries over what could happen. We all knew what the outcome would be, it was just a question of when it would begin. As mentioned in Chapter 4, the further complication to the 2003 Iraq invasion was that SARS was breaking out in the Far East. This is about as messy as it can get. Let's take a look at the time frame from September 2002 through the invasion of March 2003. As the momentum began to roll forward with Iraq, we can see the prices of crude oil and natural gas begin to climb, figures 12.8 and 12.9. After UN Resolution 1441 was adopted on November 13, the price graphs show both energy products start to move higher from there. 220. Politics. Figure 12.8 crude oil. Source: used with permission from Bloomberg LP. Figure 12.9 Natural gas. Source: used with permission from Bloomberg LP. Modern, short-term war. 221. Figure 12.10 U.S. Federal funds rate source: used with permission from Bloomberg LP. Lowe's. On December 7, Iraq filed bogus documentation that was panned by the U.S. and UN weapons inspectors as a rehash of information from 1997. This was when the energy markets really jumped into high gear and rallied hard as the prospect of war became more likely. Note, these rallied until the invasion and then fell precipitously, just like what happened during Gulf War I. This was the simplest way to play this event. Again, the risk of the event was thoroughly priced into the market before the event occurred. Then once the event occurred, the market reacted by taking off those bets. The Federal Reserve at this time had been cutting rates from prior to September 11, 2001, and had taken the Fed funds rate down to 1.75%, figure 12.10. During the fall and the push to get the UN behind an attack on Iraq, the U.S. economy continued to slide from a GDP growth rate of 4% in the third quarter to a paltry 1.4% in Q4. Corporate accounting scandals, fears of another terrorist attack, and preparations for a war in Iraq all contributed to making investors nervous and the U.S. consumer cautious. This prompted the Fed to cut rates aggressively 50 basis points to 1.25% at the beginning of November as evidence mounted that the economy was slowing rapidly. The yield on the generic 10-year U.S. government note, figure 12.11, was declining from around 5.50% in March to a low in mid-October of around 3.50%. The Dow Industrials. 222. Politics. Figure 12.11 U.S. Generic 10-year government note source, used with permission from Bloomberg LP. Figure 12.12 and the Russell 2000, figure 12.13, fell in tandem with the bond yields as fears of deflation were beginning to grip the markets. From those lows, all three began to move in the opposite direction in anticipation of the Fed move that would come in November. The equities would continue to rally up to December, when the certainty of war began to negatively impact investors' views, along with the higher energy costs. Equities would then sink until the start of the war in March. They would then begin a massive rally that would last the rest of the year. This was the old, buy when there's blood in the streets, mentality. And it worked brilliantly. Think about it. We had the Federal Reserve cutting rates, the U.S. government spending billions on the war economy, and energy prices dropping after the invasion. Let's take a look at one more piece of the puzzle, the VIX index, figure 12.14. The Chicago Board Options Exchange SPX Volatility Index reflects a market estimate of future volatility, based on the weighted average of the implied volatilities for the S&P 500 index. It had spiked during 9/11, it had spiked in the July-August time frame, but had stabilized going into the October-November-December time frame. Yes, it spiked up to 35% when the equity indexes were dropping, but it began to fall almost as soon as the invasion began and collapsed in April. This was a crystal, all clear, for investors to go back into equities and buy. Modern, short-term war. 223. Figure 12.12 Dow Jones Industrial Average source, used with permission from Bloomberg LP. Figure 12.13 Russell 2000. Source, used with permission from Bloomberg LP. 224. Politics. Figure 12.14 VIX Index. Source, used with permission from Bloomberg LP. Again, aren't we missing something? Oh yeah, the war again. The invasion began on March 20, Baghdad fell on April 9, and President Bush made his ill-fated announcement on an aircraft carrier of the end of major combat on May 1. Mission accomplished. Oops. It is beyond the scope of this book to explain why the United States is still in Iraq sustaining casualties and hasn't been able to stabilize the country. Suffice to say, the American voter heading into the 2006 midterm elections wasn't happy. Here's what I wrote on election day. I'm traveling and see today meeting with a few concerned Republicans and Democrats. I don't think either party is going to be happy with the outcome and neither will the voters. But this is U.S. politics at its best. As you know, I believe that the U.S. House will turn over to the Democrats along with the Senate. However, the Senate will be very difficult, as Democrats have to win 6 seats and maintain all the seats that they currently have. The magic number for the House is 15. Should the Democrats not take the House, this could be the beginning of the end of, effectively, two-party politics in the United States. Modern, short-term war. 225. Given the economy, the Kerry gaffe, the Hussein verdict, and lots of 24-hour campaigning, the Republican shave pulled closer in the latest polls. If this election was about the economy, we would be discussing how much bigger the Republican take would be. It's not. It's about 75% foreign policy, Iraq, and the remaining 25% stuff like stem cell research, deficit spending, tax cuts, etc. At about 8 p.m. Eastern Time, we'll know whether this election will be a wave of support for the Democrats on Iraq. 24 close House races will have concluded by then, and therefore the split will be telling. For the Senate, Virginia, Missouri, and Rhode Island will be our benchmarks. If all three go to Democrats, then we could see a mega shift in who runs Congress. The interesting scenario no one is talking about is this: a House or Senate that is won by only the slimmest margins by either side. This would present a situation of the ultimate gridlock that would be good for bonds, bad for small caps, good for large caps, and initially a negative for the US dollar. It would be good for deficit reduction, but bad for things like the Farm Bill coming up in 2007 and making permanent President Bush's tax cuts. FYI, the Wall Street Journal carries ANAS's core card for the election and will help the time frames for all the different races. So get some popcorn, sit back, and enjoy the histrionics. Remember, 2008 is right around the corner. And the day after the elections, I wrote. The new sheriff in town. As of this writing, the U.S. House has gone solidly blue as Democrats sweep to a large victory with at least 28 seats switching from Republicans. It's likely that the current Republican Speaker of the House, Dennis Hastert, will resign his seat after winning it. During the campaign, Democratic Speaker-to-be Nancy Pelosi was asked why it was important to have a Democratic majority in the U.S. House, and she said subpoena power. Actually, I'm surprised she didn't say there's a new sheriff in town. Last night on CNN, now Democratic Senate Majority Leader-to-be Harry Reid tempered that by calling for oversight, and specifically mentioned Halliburton. For the markets, it's this activity more than anything else that could have the biggest negative impact from a shift in government. The quickest action from the Democrats will come on raising the minimum wage and changes to House ethics rules. The real fun will be that the Democrats will have to actually present a budget. Watch Democratic Representative John Spratt from South Carolina, as he 226. Politics. Is the ranking Democrat on the House Budget Committee. Remember, Dems want to reform the Prescription Drug Benefit (PDB) by allowing direct negotiation with drug companies to gain volume discounts similar to what is being done at the VA hospitals. Just keep in mind, the original Democratic PDB was 3 times the size of the Republican giveaway and came in at $1 trillion. House Ways and Means controls the budget for Social Security and Medicare, and that ranking Democrat is Charles Rangel from New York. Can't wait to see the math. Senate goes to Warren Zevon. As it stands early this AM, the scorecard shows that Democrats have taken 4 of the 6 seats they need to take the Senate, with 2 races, Virginia and Montana, that have Democrats in the lead but are too close to call official. If those 2 go to the Democrats, they will take control of the U.S. Senate. Unfortunately, this could go on a lot longer than most anticipate, as Virginia law stipulates a recount for the loser if the race is decided by less than 1%. In a 2000 redux, lawyers, guns, and money are gearing up to fight any perceived improprieties that occurred during voting. Okay, not the guns, but who knows? This should also be the case for Montana. Remember, the power shift in the Senate is important, as the majority party sets the agenda and schedules the vote. Fourth Houses of U.S. Congress, the majority party gets the chairmanships of all the committees, gets to have double, sometimes triple, the staffing levels, and of course sets the course for legislation. This is why it's important who controls, even with a small majority. However, as Republicans remember all too well, you can have a change in membership that can shift who is in the majority without an election. Jim Jeffords is a great example of this behavior. Certainly with the Senate this tight, it could happen again. Another interesting question is whether Joe Lieberman will always caucus with the Democrats, as he was abandoned by them in the primary. President Bush. Today, he will give a speech at 1 p.m. Eastern Time that I assume will outline his strategy for how he will deal with the new shape of Congress. I believe he will attempt to reach across the aisle to Pelosi to see if they can work together to enact legislation, and I would bet he will invite her to come to the White House. There may be room for issues like reducing costs for college and immigration reform. For Bush, it's going to be a question of what he's willing to give to get what he wants. Does he agree to environmental or labor provisions on trade to get fast-tracked? Does he give in to something? Modern, short-term war. 227. More onerous for Republicans just to get something done and then upset conservatives going into 2008. How closely will John McCain be involved? The president's desire to compromise may be severely limited by something like an investigation into Iraq and the administration's National Intelligence Estimate. Remember, Michigan Democrat John Conyers Jr. takes over the chairmanship of the U.S. House Judiciary Committee. As an indication of his view of Bush, Conyers released a report entitled, "The Constitution in Crisis, The Downing Street Minutes and Deception, Manipulation, Torture, Retributions, and Cover-Ups in the Iraq War." This is unedited collection of information intending to serve as evidence that the Bush administration altered intelligence to justify the invasion of Iraq. The conclusion of the report: President Bush and Vice President Cheney should be censured. I wonder if House Democrats now feel they have the mandate of the U.S. electorate to do this. It's a brave new world for U.S. politics and it won't be pretty. For the markets, this should be good for bonds, okay for large caps, bad for small caps, and bad for the U.S. dollar. U.S. stocks are going to open lower, bonds higher, and the buck lower in the immediate response to the outcome. It's hard to be positive for the markets if there are subpoenas, investigations, and acrimony between the legislative and executive branches of government. Parting shot. It is not a stretch to understand that modern war is more compact in its time frame. It's unlikely that we will have another conflict that lasts as long as the Iran-Iraq War or the Soviet Union-Afghanistan War, both around 9 years. This means the shock and awe effect is not limited to the battlefield, but also operates in the financial markets. Price movements are severe, but short-lived. Yet, the financial instruments that are impacted are consistent across the last 2 major conflicts. This shouldn't be surprising given that both occurred in the Middle East and in the same country. However, it's instructive to understand that conflict disrupts whatever goods are being traded out of that area. When the disruption hits a key commodity like energy, the fallout cascades across many economic areas and financial markets. This is one of the major reasons the world focuses so intently on the Middle East and not on other areas of the world that have conflicts. Conclusion. Prior to 1996, most in the agricultural markets didn't spend too much time worrying about what farmers fed their cattle. Prior to 2001, most in the financial markets didn't spend much time analyzing U.S. foreign policy. Prior to 2005, most in the financial markets didn't spend much time analyzing weather patterns. Suffice it to say, things have changed as infectious diseases, terrorist activities, and hurricanes have all made their presence felt in ways that shock the world and financial markets. The impact from these events has been concentrated into a shorter time frame due to vastly improved means of communication across the planet. Therefore, the effect is more pronounced and sharp. The goal of this book was to show that there are consistent characteristics that events have over time. You can begin to build a strategy or portfolio and be ready to take advantage of these events should they start to appear. Of course, no new event will be exactly the same as the previous event, nor will the exact timing be the same. This means that the trader needs to be flexible and creative in figuring out what area will be impacted and when. This book is somewhat the antithesis of program or model trading. World event trading requires an intimate knowledge of numbers and statistics, but not as the sole determinant for making money. This is more nuanced, more difficult, and more exciting. The results can be spectacular, as the events that we've covered generate extreme price movement and opportunities. These are the famous, three-tailed, or three-standard deviation events that can destroy model traders who don't have strong risk management programs. To the uneducated, they seem to appear out of nowhere to disrupt trading. As an example, look what happened to Pacific Ethanol, Inc. PEIX after President Bush mentioned cellulosic ethanol in his State of the Union address in 2006. At first, everyone thought the just mispronounced something about energy. Figure circa 1 shows the jump in price and the sustained upward movement for this ethanol producer. This imet to be total surprise until one considered the desire by politicians to reduce the U.S. dependence on foreign oil and the impact of hurricanes on oil and gas production. What? 229. 230. Conclusion. Figure circa 1 Pacific Ethanol, Inc. PEIX. Better way than to encourage the Corn Belt to become the Saudi Arabia of ethanol. It is interesting to note that Bill Gates' Cascade Investmental CSA'd in November 2005 that it planned to boost its stake in the Fresno, California, company to 27%. This is one of the many reasons why we in the financial markets monitor what the president says in the State of the Union address, whether it's cellulosic ethanol or the axis of evil. These are pieces of the political puzzle for the wet trader. Having traded the foreign exchange markets for over 20 years, I can tell you that making money is not easy. You need to take advantage of every opportunity, every edge you can to gain advantage over the market. Inefficiencies in the financial markets don't occur with regularity. Model trading quickly eliminates many of these. There are so many PhDs of statistics and math from Beijing to Bucharest analyzing different quantitative angles to trading that inefficiencies exist for only a short period of time. However, it's almost impossible to mathematically represent SARS or Hurricane Katrina. This is why you need an understanding of how an event develops and how to capitalize on the situation when it occurs. WET requires broader knowledge of the planet and how it has functioned during these events over time to generate outsized profits. With this book, you have begun the process to do just that. Bibliography. Anti-terror effort up. Even as threat wanes, U.S. to spend $7 billion